Troy Sharp here, CEO of Oak Harvest Financial Group, along with Chris Paris, Chief Investment Officer of Oak Harvest Financial Group. And we've made it through the first half of the year. If you've been on a boat and just pulling back into the dock without access to Wi-Fi and just now looking at your portfolio for the first time, you may think it's been a pretty uneventful year, but that's not the case. We've had a coronavirus-induced recession, which has caused the stock market to drop precipitously, the most swift and hard-hitting stock market crash that we've had in the history of the stock market.
Over 100 years, yep.
So obviously it's not been an uneventful 6 months of the year, but here we are, end of July, and the S&P is basically flat. The Dow Jones is down about 3%. So if you haven't been looking at your portfolio or paid attention to the news, you'd think this would be a pretty boring year. So Chris, we have a lot of events coming up in the second half of this year. Obviously, the country and the world is waiting on a vaccine for coronavirus to get back to some type of economic normalcy. We have a presidential election upcoming. And of course, we're heading into the end of the summer now, where we typically see a lot of opportunities to take advantage of the second half of the year and heading into 2021. So Chris, what should some of our clients, some of the viewers to the video here, what should they be looking for in the second half of the year? What are some of the expectations, not only over the next 2 or 3 months, where these opportunities will present themselves, but post-election as well?
Right. So the summer is normally a slow period in our economy. We've talked about it in the past. We're a consumer-led economy. So the biggest part of our growth usually comes in the fourth quarter and first quarter. But what we like to do here is use that summer lull in economic activity. Usually you get a stock market pullback anywhere between maybe 5 and 7%. We like to use that as an opportunity to try to set the portfolios for what we believe will happen in the fourth quarter and beyond. And with the Federal Reserve sticking to their policy of easy money, trying to stimulate the economy, with the folks in Washington, D.C. implementing these programs to try to get our economy back going back. We think the fourth quarter is going to be better than people expect. And, if we get a vaccine, if we get some kind of virus cure, sooner rather than later, 2021 is going to surprise people on the upside because the comparables are very easy.
And so here's the thing that a lot of people aren't looking at when we focus strictly on what's going to happen with the presidential election or what's going on in the news and all the noise that we're always saying we need to make sure we tune out. When we look at the backdrop of support that the economy has, from this point forward at the end of July, let's say over the next 9 months, we have unprecedented levels of Federal Reserve stimulus. So we talked about how the crash this year, the coronavirus crash, was the most precipitous and hard-hit market crash in over 100 years. But the reaction by the Federal Reserve was more swift, and in such a large amount of money that has been injected into the economy and into the marketplace than any time in the history of the world. Yep. So we have that backdrop, very, very dovish Federal Reserve that is in a position to continue to stimulate the economy on top of the massive amount of stimulus that they've already done. And on the coronavirus front, we have every scientist in the world working on the coronavirus and trying to develop a vaccine. And we're hearing very positive news about effective treatments as well. So when we're looking forward to 2021 earnings, compared to 2020 earnings, these are the comps that oftentimes drive individual stock prices and the overall stock market valuation. Companies are going to have a very, very easy time beating their 2020 earnings with the backdrop. You combine that with the backdrop of unprecedented Federal Reserve stimulus, plus the very high likelihood of having some type of vaccine by the end of the year, at least according to Dr. Fauci and many of the other experts. Johnson & Johnson just today, really, really good news. Moderna, a few other biotech companies, very, very positive results as far as the phase 1 trials for coming up with a vaccine of coronavirus. So with that backdrop, we will see some of the lagging economic numbers coming out, or some of the economic numbers that lag the slowdown in the economy in the first and second quarter. But that creates opportunity, does it not?
It does. It does. Yeah, looking out to 2021, regardless how the election goes, the the president is most likely going to want to try to get these people reemployed. Everyone knows tens of millions of people have lost their job either temporarily or permanently, and the goal and objective of any administration is to get those people back working and to try to stimulate the economy even further. Who knows? Maybe we're going to finally get this big infrastructure plan that the president has talked about for a number of years. That would stimulate jobs. It would probably cause rotation in the market, which would be a good thing. You would get some money leaving a lot of the big tech stocks, which have been the focus of this rally, the Amazons and Googles, which are great companies. But you get some of that money flowing over to the Caterpillars and Deeres, which essentially have been left behind by the market since early 2018, when we started this tariff tug of war with China.
And we're getting to the point in the election season where we're hearing from a lot of you. Troy, what happens if Joe Biden wins the presidency? What happens if Trump wins the presidency? And our main point here is because of the Federal Reserve stimulus, unprecedented levels, and we have the second half report coming out very soon where we're going to have some charts in there to show you what type of impact that the Federal Reserve has made on the stock market historically and what they've done recently to really show how powerful that injection of liquidity into the marketplace is when it comes to future stock market performance. But regardless of who's president, we will have different growth rates moving forward in the country. There's no doubt about that. But America is still America. America is still going to grow. We're not going to turn into a third world country. And when you look at the prospects for 2021, the earnings comps this year compared to next, companies are going to have the easiest earnings comps in 20 years to just blow out of the water. A massive federal stimulus in the backdrop to support any other economic slowdown that we may incur. And of course, once we get a vaccine, things are going to get back to a more normal sense of what we've been used to.
Things that people have seen on TV lately are positive for the economy in the future. There's always a lag effect when the Federal Reserve floods the economy with money. You get a reaction in the stock market in certain groups because people go out, and you've heard of probably Robinhood day traders. That's been a lot of press. You get a group of people who go out and use the liquidity to buy certain types of stocks. But it takes quarters for the money to get into the banking system, then to get into lending, then to get into industrial manufacturing. And so what we should see is kind of a rotation throughout the market, positioning for the fourth quarter and for 2021.
Because the main companies that have really driven the S&P 500 higher over the past 2 to 3 months here have been Amazon, Apple, Microsoft, Facebook, the tech companies that comprise, I believe, about 20% of the S&P 500.
It's upwards of 24% now, something like that.
And many other companies out there that are going to be direct beneficiaries of the stimulus that has been injected into the economy. A lot of these companies are paying excellent dividends right now, and we have the opportunity not only today, over the past few months that we've been taking advantage of, positioning for the second half of this year in 2021.
A lot of the consumer staple names that haven't been booming. So say a Pepsi, which has done very well on their snack side coming out of the virus, people at home eating chips and indulging. Their earnings last year were depressed because the dollar was strong. The dollar is weakened. It takes a few quarters for those effects to flow through into their earnings. So.
One of the things we're always doing here at Oak Harvest Financial Group is looking at the behind-the-scenes indicators that help give us information and insight into what sectors of the economy should we be investing in, what rotations are we seeing, and what are risk levels doing behind the scenes. And we talked about this in the March 23rd video that we recorded and sent out to you as clients, talking about we're seeing the healing signs behind the scenes, and we feel there's a very high likelihood that the worst is behind us and the market should move higher from this point forward. So the signs that we're seeing behind the scenes now that are giving us this insight that we're sharing with you today, how confident are you in the fourth quarter of this year and what these indicators are showing us in regards to positive market performance heading into 2021?
Yeah, those same indicators are saying that we're going to go through a period of about 3 months here during summer, which is a typical summer.
And this is where the opportunity is.
And this is where the opportunity is. This is, if you're a longer term investor and not a Robinhood day trader, you want longer term pauses in the market. You want the 5 to 7% pullback that normally comes during summer, because you want that opportunity to get your portfolio better positioned for an economic recovery and the opportunities that present themselves over the next 12 months to 24 months. And the same indicator, which said in late March that the healing signs were there, that people were panicking, it was beyond reason, are saying that the time period of the pause should start to unwind and things become more optimistic looking forward by mid-October. I mean, that's even before the election takes place. So, looking at the fourth quarter, looking at 2021, I know everyone tends to say, hey, the second half is going to be better, but that's the way it looks right now. And it would be a very normal year because of the consumer. If we get this vaccine or anything that looks like we'll have one in 2021, the economy is going to start to pick up steam before everything is perfect.
I encourage you to go back, look at that March 23rd, March 24th coronavirus market update that we sent out to you, just as a little bit of refresher of us talking about some of these behind the scenes indicators that helped us have the insight to lead the portfolios in the direction that we felt the market was going to go over the next couple of months. And that's what we're doing now, and that's what we're going to continue to do for you over the next couple of months. And also keep in mind that when we're managing investments as part of an overall financial plan. Also be on the lookout for our second half market update, which is going to be emailed to you and also posted to the website. I'm Troy Sharp, Chris Paris. We look forward to giving you another update real soon.